So hello everyone and welcome to Cafemutual channel. In this edition, we have with us Anup Maheshwari, Joint CEO and CIO of IIFL Mutual Fund, and Shashi Singh, Senior Partner at IIFL Mutual Fund. So let us hear from them to understand what practices and strategies they have been following to make their fund house a household name among MF distribution community. So let's start with Anup. Anup, I'll start with the question which is on everyone's mind today. So you have been in the fund management industry for, I guess, over 20 years, right? And you
That's right.
have seen many market cycles so far. So how do you read the current COVID-19 pandemic and its impact on equity funds in the near to medium term? Anup, over to you.
So, sure, Nishant, and thanks for having us over to start with. So this is obviously the first time we've experienced an economic lockdown of these proportions globally. This is clearly something that most businesses have never really experienced in the past. And therefore, it is again quite unique. But we've seen this as well. Every time there's a big correction or a big shock to the system, it tends to be a fairly new and unique situation. So this is another unique situation that we have to deal with. I guess the good news is that eventually, things have to come back on track. I mean, this is not a permanent problem. This is a transient problem. It, of course, will have some negative effects on businesses. Some businesses will not make it back, whereas some will get stronger. And this always happens through such difficult cycles. But overall, people expect things eventually to get back to some degree of normality in the next couple of years. So, from our point of view, therefore, whenever businesses get mispriced based on short-term fear and circumstances that are extrapolated in the future, it does tend to present an opportunity to look at certain businesses or certain companies. So, for equity investors, I mean, this is going to be a fairly it will test people's patience, I do believe, because imagine going back to 2008, 2009. The thing about equity markets is when you look at it over a long period of time, it's a nice upward curve, but there are sporadic corrections in, and living through those corrections is the tough part. It looks on a long-term chart like a small move, but it lasted for a year and a half in 2008-9. It may last for some time now. So the challenge is, if you're looking at markets on a daily, weekly, monthly basis, you a cocoon of bearishness and keep seeing all the negative things around you, and over time actually get more switched off the asset class than seeing it as an opportunity. So we're just cautioning people that don't get into that trap. You may decide to not do anything for a while given the uncertainty, or it's all a personal choice really, but depending on your own cash flows. But this is not over the next year or so, avoid the temptation of getting too negative as well. Because just like we have unexpected negatives, we also have unexpected positives. And I just do believe that eventually businesses find a way back.
Okay, so when would you see the normalcy restoring in the economy?
Well, it's anyone's guess, because right now we don't even know whether this is going to be a start-stop type of phenomena or not. But we're just proceeding with the assumption that over a 3-year cycle, things come back will be normal. And maybe this pandemic effect, etc., over a year or a bit more than that will finally get back and get resolved. It will take businesses a little more time to get back, because, as I said, there will be some businesses that will suffer, particularly in the services area. Some habits will change post all of this. So it might take businesses a little longer to get back, but then markets move ahead of that curve always.
Okay. So my next question is to Shashi. Shashi, so far we have seen IIFL Mutual Fund has limited set of product offerings. So you have only one equity fund and two debt funds so far. So why does your fund house believe in niche strategy? A and B, are there any plans to diversify your offerings?
Yeah, hi, good morning, everyone. And that's a very relevant question, especially for the audience from the IIFL mutual fund perspective. So right from the beginning, we've tried to position ourselves as a niche AMC, where the ultimate objective is to, one, bring to retail public products which are not normally available to retail, say like products which are institutional products or where there is a differentiation. And secondly, we are totally focused on alpha creation, and therefore we do not have too many mutual funds which are like same in the industry and a medium quartile performer across all the product basket. At the same time, as an AMC, we look at ourselves as a holistic AMC across platforms. So we work on MF, PMS, and AIF. What you will find more often from us is products which are the need of the hour, not available in the market, or differentiated because of performance. If you see our only equity fund, which is currently in the market, which is IIFL Focused Equity Fund, it's a focused strategy as per the SEBI classification with a concentrated portfolio of 30 stocks. But these are the best picks of our fund management team, which we offer through our AIF, through our PMS, and through the mutual fund. So the mutual fund investor today, even if he's investing 5,000 rupees, gets the benefit of institutional approach to this investing. If you see our performance in this product, we top most performer for last year. And across 1 year, 3 year, 5 year, we're in top quartile performance. So the focus is always performance and not on AUM or getting the more AUM from there.
Okay. So there is no plan to diversify your offering going forward?
No, I won't say that there's no plan to diversify our offering, but it is not that just because I am there and the AMC has to launch multiple products. We will launch products as and when we feel there's a need and there's a lacuna in the market, there's a vacuum in the market. Like last year, we had launched a capital enhancer fund, which was with a hedge. And maybe if we find a need, we will see. But currently the fund that we run, which is the Multicap Focused Equity Fund, which is a 30 stock portfolio and a top performer, we manage close to 900 crores over there. And we want to build that. At some stage, we'll shut that fund if the size becomes a little larger. But as and when time demands, we might launch new products.
So Shashi, IIFL AMC is a household name in alternative space, but not so popular in the mutual fund space so far. So why that is so, and how will you promote IIFL mutual fund among investors and distributors?
So, IIFL AMC as a AMC started off as an alternative AMC, focus more. And therefore, if you see in alternate investments, we are the leaders in the market. And now we've started doing a lot of mutual funds, but because we were focused on alternates more, we're not into the retail market. As of last year, we didn't even have branches. We currently have 8 branches and we plan to expand our network to about 13, 14 branches. But having said that, we'll not be a pure retail AMC ever. We want to reach out to the investors through our partners and people like y'all, platforms like y'all, reach out to them and then our performance speaks so people could take benefit of that.
Anup, my next question is for you. So how is IIFL Focused Equity Fund different from other focused fund in the market? Why do you think that focused strategy works better than diversified schemes?
So Nishant, no, this is a focused fund because that's the way we like to operate. It doesn't mean diversified funds cannot do well. I mean, there's enough debate on diversified versus focused, and honestly, I believe both strategies work in their own ways. It's really you got to do what you're comfortable doing. And we like the fact that we have fairly intense research on a select group of companies in a certain framework of philosophy. And we like to take this more concentrated approach of 30 stocks. So that works for us. Therefore, we have a focused strategy. What is different from the others? I guess we're all operating in the same universe. We have our own framework. I'm sure others have their frameworks as well. We operate with ours. And our fund has done quite well. Our stock selection has by and large been on track. It's a multi-cap type of focused fund. So it's a good spread between large caps and mid caps. And by and large, I think our stock selection has helped us in our performance. So I wouldn't say there's, we're all operating in the same universe. It's really just a function of what process you follow and how you select your stocks and how consistent you can be. So the only, I guess, factor to look at us and compare us to others is more based on the unique processes that we follow, how we run as a team, how we spend our time, how we build the portfolios, and then of course the track record, which is representative of all of that. But yeah, I mean, broadly, we run it with the same universe that everybody else runs.
Okay. Anup, IIFL AMC has been running multi-cap strategy successfully in PMS and AIF. So what learnings have you implemented in IIFL focused equity fund to ensure attractive performance in mutual funds too?
So we follow a very similar approach across these three books of business, the PMS, the AIF, and the mutual fund. So another thing you'll notice is we're not sort of hedged by having different portfolios in one versus the other. If we believe from our research process, the research process is common. If we feel there's a good company and we have good conviction on it, then we will build it pretty much across all three books of business. We don't tend to differentiate one versus the other. And so, either we'll all do very well, all our funds, or they all do badly at a point in time, because it's effectively the same set of stocks. So we don't try and hedge that one fund does well, one fund does badly, and we have something to sell at all points in time. I think we'd like to stick with our strategy, and hopefully we are more right than wrong. And the performance has therefore held out for all the funds. I mean, we've done well across the board because they're all following a similar style, philosophy, and portfolio.
Shashi, my next question is for you. So far your fund house has worked with select distributors like banks and large NBs. So how do you plan to strengthen your distribution network going forward?
Yeah, so for alternate investment funds, we work through very select few distributors, and the sole reason being these products are more riskier products and HNI oriented, and hence we only work through those distributors. But our PMS and mutual fund is open to all distributors. In PMS today, we have about 52 distributors who are empaneled with us, including some of the leading banks and some lot of IFAs with us. We have in the mutual fund close to 1100 to 1200 distributors empaneled with us, and we are making efforts to reach out. As I said, we are a very differentiated AMC, and we're very active digitally and online. Even in this COVID situation, when everything was in lockdown, we're the first ones and the only ones who started accepting PMS applications totally online. So on the mutual fund side also, a lot of effort to reach out to investors with our product, our performance, and enable them to invest online digitally. So if the question is that will our AMC have 100 branches in the near future, I don't think so. But will we reach out to equal number of public? Yes, digitally the endeavor is to do that.
Okay. So why should distributors recommend schemes offered by IIFL AMC, Shashi?
Yeah, so as I said, one advisor is looking at the performance and the differentiation. If you see the multi-cap focused category, we've been leading performers across 1 year, 3 year, 5 year. So that's one of the primary objectives that a customer looks at, and he would find that attractive. Secondly, availability of our fund across all platforms wherever they seek information for the product. And thirdly, most importantly, is that, as I said, we're bringing to the masses a product which is managed like an institutional product. As you yourself questioned, we run the same strategy across AIF, PMS, and MF. And as Anup mentioned, we do not differentiate between which stocks we buy here and there. So an investor who's not able to invest a 1 crore rupee in an AIF, but still wants to get the benefit of that kind of performance, can do so by investing in our MF also.
Okay. Anup, my next question is for you. So IIFL Focus Fund follows multi-cap strategy with a large cap bias. Tell us more about this strategy, and why do you think this strategy works better for investors?
So Nishant, so we run about 60% is in large caps in our mutual fund, and about 40% is small and mid caps. That's the broad mix. It's not written in stone anywhere, but that's how we've managed it so far. And where it's useful is that you've seen whenever the manager has an element of discretion, then he's able to exercise a view. So there will be some times when mid caps get very cheap, and therefore you may want to increase that mid cap component in your portfolio. There are some times where it get very expensive, you can decrease it. So it just gives you more flexibility, unlike let's say only a large cap fund or only a mid cap fund, which has no choice but to remain in that segment, irrespective of the valuations. So it just gives you a little more ability to adjust your portfolio from time to time if you believe that valuations have become too stretched and there may be some other opportunities by market cap. So that's just one factor. But beyond that, it really boils down to your stock selection eventually. I think whether it's large cap, mid cap, small cap, you'll always have some stocks that will do well in all categories. And really, that's the key to be able to capture. And a multi-cap allows us that.
So you would define it as market cap agnostic fund?
Yes, I would define it that.
Okay. So Anup, my last question for you. The fund has outperformed its benchmark and category over 5-year period. So what has contributed to this performance? If you can, if you can mention 3 points.
Yeah, so I can answer it in one point actually. It's just stock selection. That's all that it is. Because in a 30 stock portfolio, you have to get your stocks right and wrong. So that's clearly one thing that has helped. Another thing that I might mention is, we've been overweight financials over the course of the last 5 years. That worked very well for us in the past. Right now, obviously, it's a slightly different situation for financials given the circumstances we're in. So we've adjusted our weight a little bit. But long term, we're still very bullish on this sector, and we have a very strong view that if financials as a sector doesn't work, it's very difficult to imagine the Indian economy or the stock market doing well, because it's a very, very core ingredient of the India consumption story. So we are waiting to actually build that back up at the appropriate time. But having this overweight in financials and our stock selection in financials, it's a sector you have to be very careful about, because you can have a lot of winners and losers. So you have to make sure your risk management assessment is good. And we've devoted a lot of resources to this sector to understand it as well as we can. So I think a combination of that combined with our stock selection, not just in financials, but across other sectors, has really helped us in the past. But as we say, past performance is history, I think, and you've got to look more at the future and what is our portfolio positioning and whether our investment approach is consistent through cycles. So, past is history. I think we always have to look forward.
Okay. So Anup, which sector would play out in the next 3 to 4 years, according to you?
So as I mentioned, I mean, it looks like a very pained sector at the moment and will probably may stay so for a little while. But eventually, I think financials have to come back over a 4-5 year period. At least the good thing is, as we're going through the stress, valuations are getting cheaper and cheaper. So there will be some opportunities that will present themselves there. Some of the longer term sectors that are pretty much evergreen and have come back strongly right now is pharma, to some extent IT. Consumer is a slightly tricky sector because there the risk reward doesn't look as appealing to us. Consumption will be under some stress and valuations are quite high, so we have to be a little more wary there in our stock selection. And somewhere down the road, we are quite optimistic that over a 3-5 year period, we will look at some economy sensitive businesses as well. It sounds like the absolutely wrong thing to say at this point, but the fact is there's a lot of value in those businesses. And I think even a small change in our economy 2-3 years down the road will probably create a lot of value in that element of the portfolio. So these are some of the areas that we think can do quite well.
Shashi, my last question is for you. So what is your roadmap for IIFL Mutual Fund for the next 3 years?
So for the next 3 years, we want to be known as a niche AMC, which has broad products, which are the need of the hour to customers with top line performance throughout. Also want to be known as an AMC, which has been at the forefront and taking new initiatives. And like we're aggressively working with the Cafemutual, with Paytm, with such online platforms to make our fund available to the mass geographic area of India, not by the branches, but through this. We're seeing digital applications increasing by the day. So we will be at the forefront of all innovation and try to bring products which are the need of the hour.
Thank you so much for your time, Shashi and Anup. Hope.
Thanks, Nishant.
Yeah. All
Thank
the
you,
best
Nishant.
in the future endeavor.
Absolutely. And we wish all the Cafe Mutual viewers as well a whole very safe experience. Hope you get back to work safely at some point in time, and wish you all the best, you and your families. Thank you.
Thank you. Shashi, your last message for distributors in this COVID-19 situation?
Yeah, you are the ones who will bring the patience and calm for the investors. So please advise your investors. Communication is key at this time. So please communicate with them. This is the time to be patient, and no one can change anything here. And as Anup also mentioned, just stay put in good products, and we will sail through it. Stay at home and stay safe. Thank you.
Thank you so much.